You've seen those ads, right? Like they're really professionally done. I think they spent like $1 million making those ads, but they have like the HELOC on the credit card these days. Like,
Hmm.
how cool is that?
It's really, it really does sound pretty cool though, looking at it. Like, wow, you can access your like home equity with the credit card. That's nuts.
Yeah.
Technologies these days, right?
It's like that Amex card that you can buy from Target or Walmart, and then you load like 100K into it, right?
Really? I've never heard of that one. What do you mean? You can buy
You know,
an
like
Amex
those
credit card?
those like it's a gift card. It's a
Uh-huh.
Amex gift card or a Visa card, but you
Yeah.
could like load money into it. It turns into it's like a burner debit card almost.
What? I've never heard of that. Well,
Never
why
heard
would
of
you
it?
put 100 grand into an Amex gift card?
Why would you put 100 grand onto a credit card and use it tied to your home equity? You didn't work 10 years to build 6 figures of home equity just to accidentally spend it on gas, groceries, or flights using a credit card. That's exactly what some of these app-based HELOCs are doing. They give you this nice-looking credit card, but it's tied to your home. They make you feel like you're earning rewards by using the credit card. But behind the scenes, you're racking up fees that chip away at your financial safety net. Some of these platforms charge up to 2.5% every time you pull out cash. If you ask me, that's not really flexibility. That's not what a HELOC was designed for. In this episode, we're gonna break down what these credit card HELOCs don't really tell you, why they can be dangerous from a long-term financial health perspective, and what a real strategy-based HELOC should look like if you want to use your equity wisely. Because when it comes to 6-figure home value, convenience and fast doesn't always mean smart. Hi, welcome to The Clear Close. We're the mortgage experts to help you get clear to close on your next mortgage or your next HELOC. And today, Jason, we're talking about these digital HELOC companies that are advertising like, convenience and speed and low fees because they're all automated and they're so convenient that they even give you this little credit card to do all your shopping on, and it's tied to your home equity.
Sounds like a recipe for disaster.
I think we need to define the purpose of this video. This video is like a PSA. Maybe think twice about trading convenience for safety. All right, so I mean, we could talk about the pros, right? Like we've done some research on these type of platforms, but they advertise, super easy to go through the process of getting qualified. As long as you meet the minimum qualifications, you can get approved very, very quickly. Sounds familiar to our HELOC that we do.
Kinda. Not the
Kinda.
same.
Same, but different.
Definitely not the same.
What is the thing that we've uncovered when we did our research on these platforms? Like, what is the hidden fees that they don't talk about?
The HELOC is primarily a tool where you can access your home equity in what's called draws. So when you want to do a draw with this HELOC, right, that one, they charge you a fee every time you make a draw. Not to mention they charge you the initial fee on your first draw when you first start the card. So it's like, wait, every time I need 10 grand, I have to pay an origination fee again, basically, over and over and
Basically,
over. Like, and it's like
yeah.
you pay it back, and then you draw on it again, and you got another. You're redoing the loan how many times if you need it, right? Like,
Right.
imagine
At
if you
that
took
point, why
100
even
grand
have
down.
a line of credit? You just take the whole thing and you save money actually that way.
Do you? Because you're paying interest on it too, and if you're not deploying the
Well, they get you
capital,
both ways. Yeah,
they
that's
get you
right.
no
Yeah.
matter what. So it's
They
like,
get you both ways. Yep.
but the advertisement looks so good. Like, hey, use it like a credit card. Earn cash back every time you swipe it at the gas stations. Why are you swiping your home equity at the gas station?
Why? Why? Why?
Why are you swiping it to eat food? I don't understand this. Like, it sounds good, but it's like when you really uncover it, like if you're trying to use this as an investment tool for like a rehab project on your home or a rental property, like I need to pay my contractors 10K. I need to draw 10K. Swoop, there goes 2.5%. All that
Yeah.
2.5% every time
Two and a half
you
percent
request a
just
draw.
every time. Boom, boom, boom,
Every
boom.
time. It's like, and then you pay it back and you do it 2.5% again. And the next one, it's like, that's
And
absolutely
then you're
insane.
paying interest after you've used that money.
Correct. And then it's like you paid it all back 3 months later, but okay, now you're on to the next project and you do the same things, draw 100 grand from it, 2.5% con. That's nuts. Who does that?
let's think about this. You're putting your biggest asset on the line, which is your house, and you're tying it to a credit card.
So basically what this credit card slash HELOC home equity access tool, it doesn't enable you to make like the smart decision, right? For renovating like a property, creating equity and value on your rental property or portfolio or your primary home, right? Pay down debt, make smart investment moves for like your business or other portfolio items you're working on, right? A good HELOC won't restrict you from that because if you have a platform like this card does, where it charges you per large capital, like injections you need to make into your investment or your projects, that's highly restrictive. You're gonna second guess everything because you're like, oh my god, I have to pay 2.5% every time I use 100 grand. I'm spending 25. It's costing me $2,500 plus the interest on those payments to make this project pencil out. Like those $2,500, like over time, is not. It's you do that 10 times a year. It's 25 grand. That's not in your pocket because it costs you that much to utilize those funds. And then you have the flip side of it too. It encourages behavior on spending on small things everywhere.
Yeah, that's such a critical point because the incentive structure for this is for you to just do consumer goods, groceries, gas, Target runs, Walmart runs, whatever. And if that's how you're gonna spend your equity and you don't have the income to replace that, like, effectively, then it's just a giant credit card. If that's the use case for it and that's the best use case for it, just open up another credit card and, with better points and advantages, like, get free miles to your airlines, right? And to Jason, to your point, I think it's worthwhile to describe what a HELOC is for viewers who are unfamiliar with the HELOC is. Like, we have a lot of first-time viewers on this channel. So, here's a 60-second clip of what a HELOC is. A HELOC is a secured revolving line of credit, and it's secured by your home. That means you're using your home as collateral in order to borrow money. It functions similar to a credit card, but it's not because it's backed by your house, and you get a much better rate because you have a hard asset securing that line of credit, as opposed to an unsecured line like a credit card or a personal loan. The line limit is calculated by using your equity position in the home and your ability to repay. You can get a variable interest rate or a fixed rate interest rate HELOC, and there are slight differences, but generally speaking, they both have the same structure. There is a window of time where you could use that line of credit, and there's a window of time where you can no longer draw money and you're just repaying the loan. Now, the rates are tied to a benchmark. Usually it's like the prime rate, and lenders will usually attach a small percentage point on top of that, plus fees that are used to pay the teams of people, including someone like me, the originator, to get you that loan across the finish line. With the HELOC, it's a line of credit. So most people, like, the best use cases for it are building your wealth, using it for investments, renovations, and those things take large chunks of money at a time, right? Installment payments or down payments or something. And so if you're using a platform that's going to charge you for every large draw, um, yeah, like Jason said, it's very restrictive and it's discouraging you actually from using a HELOC in the best way it's supposed to be used. Jason, what is our motivation not to overspend on credit card? It's the high interest rate, right? Like, you don't want to pay 28%. But when you see this another credit card with a very low interest rate of like 8, 9%, it's a lower hurdle for me to just like, okay, I'll overspend and I'll pay the minimums for a while because I'm not accruing as much interest compared to a 30% credit card.
Yeah, no, there needs to be a lot more financial education, in my opinion. That's not out there. Like in the wrong hands, it's a very dangerous product. Not even the wrong hands, with poor guidance, right? Poor advice or like the lack of education. I don't know how else to describe it. It's just you can end up making what might have been a good decision bad overnight because it's like all it takes is a couple bad swipes and you're like, oh, that was too easy. You don't feel it. Like I'm sure we all have had credit card debt and we've seen how it's like you can swipe it and you don't feel it and you're just like, holy crap, 2 months later you're like, what is this, and it's like, oh, I'll get it, I'll pay it back on when my next paycheck comes. For me, it's like every time there's some major repair, it's like you have to have a backup plan for it. It's like I want my points, I love my points, I especially love my hotel cards, by the way, but but for your goals, you have to know, like if you're going to put it on a card, like especially like a credit card to your home equity, you really need to pay that thing off. Yeah, and you definitely have to have a plan, not just paying it off. You need to set boundaries.
Jason, correct me if I'm wrong, but I'm willing to even say something along the lines of if you're trying to put your home on the line or like extract equity from your home, in order to get like spending cash, if you're in a certain age bracket, like 55 and older, it might be even better for you to just go with the reverse mortgage because at least you're not paying the fees and there's no monthly mortgage payment on a reverse. Like if that's your mindset and your goal.
Well, you got to be 62 or older at the minimum, and you have to have virtually a free and clear home or close to it, right? At 62.
Yeah.
But yeah, no, I would definitely go with the reverse mortgage in this case because like if I'm 62, 65 and I have a home that's almost fully paid off, I've been good with myself financially, but long term I don't want to deplete my 401k or IRA, or I don't want to draw on it too early until my tax advisor says I need to. I would consider a reverse because there's different ways to set up a reverse mortgage. You can get it right now, pretty low interest rate because the market's down, but you can get them in the sixes. And that's very low compared to a second mortgage. It's very low compared to, it's basically an FHA loan. And then you have a feature on there that if you don't need the cash right away, you can have it as a line of credit. And that's the unique thing about the reverse mortgage line of credit, where if the unused portion remains unused, it'll increase the available credit limit will increase every year based on the interest rate that your reverse mortgage note is tied to. So if that interest rate is 6.5% and your credit line was 100 and it's 100,000 unused, next year it's $106,500 if it was 6.5%. Just as an example, it'll grow by that amount because the unused portion will adjust, and you'd have a growing line of credit should you need it. Yes, your reverse mortgage loan would be like 100, 200 grand growing at 6.5%, but that full amount is not due. You still have an unused portion that you can have access to, and eventually it'll pay itself off. So strategically, like how you might consider using that could be of benefit for you.
Yeah. And if you're not of the age to qualify for a reverse, like just do a regular HELOC. Like, okay, we have a HELOC on our platform. There's a link in the description or the pinned comments, or you can use the QR code up here. But I I mean, our HELOC is very simple too in terms of the steps it takes to get through from like application all the way through funding. Like we can be as fast as 5 to 7 days, right? I mean, it's majority of it's online. There's no like physical appraisal, no physical notary that you need. So like there's products out there. And another bonus, and I just this is the craziest part to me. Like they don't have people on the other end of the phone. You know, it's all chatbots. So like for people who have questions, if you've ever called a call center and it's just like answering machine after answering machine and press one for this and press two for that, right? Like,
Sorry, you pushed the
come on,
wrong number.
like,
I'm going to hang up on you now. Try again later.
yeah. I mean, is that the experience you want when like 50,000 to 100,000, maybe even up to $400,000 of your
You
equity
bring a
is
very
like
good
in
point. Like
question?
it's like you take out this card and then like you can't get anybody to talk to you. You can't
Yeah.
get answers that you might have. It's like you have to read the fine print and figure it out by yourself. Like that's how we figured it out because we talked to clients that looked into this and they're like, "Did you hear about this?" And I was like, "I've heard about it and it sounds pretty cool." And then we start unpacking and we're like, "Whoa, this is nuts!" Like they don't advertise this part of it online. They're like, it's always
Yeah.
cash back, but then it's like, oh my gosh, you draw on it. It costs this much. The initial draw costs this much. I'm like, wow, that's like leveraging it the way they with that card or that line of credit product, and then using ours is like significantly cheaper in most cases because we're not charging you per draw, right? There's
Mhm.
no fee for that.
And
It,
and there's no early prepayment penalty. So you can pay that thing off. You could pay that thing down to like $1 and then keep the line open and pay interest on that dollar.
that's like the stuff where it's pretty gnarly to me. And if we talk to like other banks, like my primary bank that I go to, it's like, yeah, it's like there's a closeout fee. The best looking interest rate is like a teaser rate for 6 months, and then it's like variable thereafter, and it just like doubles immediately.
It's like,
And then yeah, dude, it's nuts. It's nuts. It's like then I see the credit union ones, and some of them are really insane. It's like every draw request has to be approved by the bank manager. Like the purpose,
yeah,
I'm like,
what
wait,
is
you're
that?
refilling out application just to get access to your home equity line of credit? That doesn't make sense. It's like there's just so many
Yeah,
backwards
these are not
ways.
lines of credit. These are not lines of credit then at
Then
that
it doesn't
point.
sound like it at the end of the day. It's like the part is like every time you use it for the line of credit feature, you're basically repaying to use the line of credit feature every time. That's what it sounds like when I see it.
Right.
Right? It's like
Re-originating every time.
you're re-originating your draws every time. That's nuts.
I mean,
I don't
yeah,
even
I
like
mean,
using the word PSA. It's like PSA sounds so clickbaity. It's like it's like I don't know. It's like
yeah.
wh-
No, I mean, people could challenge us and, not give us the benefit of the doubt, be like, you guys are just trying to advertise your own product. You guys are only in it to sell your loan versus whatever, whatever. Yeah, that's true. I mean, this is our job. We sell loans, right? We're loan originators. But it's worth it to know your options out there and to know like the whole picture, right? And Jason's gonna be the first one to tell you whether our loan makes sense for you or not.
Peter sees it all the time. Like I tell people not to do loans. It doesn't benefit me financially to tell you not to do your loan, but it doesn't make sense for you financially, maybe, right? So you have to be able to discern what is good and bad, and whatever sounds good, there's always pros and cons to it. So just we want this to be more of a tool. Like the main purpose behind the channel here is more so that you can educate yourself to see things a little differently. Did I ask the right questions or not?
Mhm.
Is this the right decision for what I'm trying to accomplish? We have our Clear Close West Capital HELOC programs designed the way they are because of what we've seen in the marketplace, and being able to put this out there with confidence, knowing it's the best. Yeah, you're going to hear it from us.
And this is a promise that we make to you guys as the Clear Close. We're going to be your partners through this whole process. So whether you decide to do a loan with us or not, whether you decide to go with the HELOC or a reverse or a cash out refinance, or you want to purchase a home and do the mortgage through us, like we're going to be your partners through the life of the loan and even beyond that. You're not going to get that with a fully AI or chatbot platform. You have us in your corner that you can rely on. We can escalate things for you. We can talk you through things. We can do scenarios with you, and it's going to be very personable. We're on the phone a lot.
Yeah, no, that's primarily most of our days. We're just talking to viewers like you every single day. Like that's the beauty of being part of our family, like being a part of the Clear Close, because every lender is good at a specific time or market. There's a specialty that lender A is good at and lender Z is good at. And in up and down markets, types of products, time of year, some stuff you may never know, like internal staffing, organizational changes. Like we see a lot of that. We see behind a curtain, behind hundreds of lenders. So we know which ones are the best, which ones are consistent, which ones we can hold accountable to our levels of expectation from them, because we are shopping on your behalf, because we are the broker. So for that, like a real broker, a real broker and real brokerage, they're going to know the industry inside and out, like the back of their hand. So like for us, when we recommend our product, our HELOC, or we review someone else's product, we've seen under the hood and we know what makes those items or products work.
We're telling you what the best options for you is for your strategies based on what you're telling us. And so that's another promise that we can make to you, that we are always going to look for your best interest.
Absolutely. That's why we call ourselves a Clear Close.
Yeah, clear. But we close. If you enjoyed the content that you saw here, please give us a like, subscribe to the channel, and share it with somebody that is maybe on the fence about getting one of those credit card HELOCs. Show them this video so that maybe they have a different point of view. They can make an informed decision. And with that being said, thank you so much for watching the video, and we will see you guys on the next one. Thanks for watching the video. If you want to know more about DSCR loans, there's a video we did right here on top. And if you want to know more about a HELOC and the mistakes you can avoid, there's a video on the bottom.